So what I'll do is just give you a little bit more background. So today's session, we're going to be looking at those Jigsaw trading tools, how our traders are using them. You'll hear about the best performing order flow strategy of April 2024. So this past month, what strategy has been performing the best, where traders have been making as well as losing money in the markets. So that includes the markets they've been trading, the times of day. So we'll be looking at some interesting analytics from our traders across our trading floors. We've got equity curves and analytics of our traders. You're going to hear about how you can benchmark your performance and make critical changes to your own trading, and then how to use Jigsaw's trading tools to improve your trading results. All right, so as I said, these are insights and analytics that have been observed on our floors. So our primary office is here in London. This is the one that started it all. So you can hear us in some of the pictures. You've got Alex, our co-founder, who'll be joining us, and some of these other traders you may recognize. We've also got a floor in Poland, and our latest development in Cyprus, and we'll actually have two traders from our Cyprus office who'll be joining us to share some insights and results from, you'll be hearing directly from the horse mouth, so to speak, or two horses, that is. All right, so what I'm going to do is bring Alex on. Alex is going to do even better introduction than I could do. So are you there to join us?
Yes, thank you very much, Craig, and I hope you can all hear me. Craig, can you hear me okay?
Loud and clear, coming through 100%.
Perfect. Okay, welcome, and I'm incredibly excited to be in this workshop. We've been using the Jigsaw tools for training our traders for so many years now, whether it's replay drills. The Journalytix has been a core feature for all of our traders, constantly developing themselves. And what's incredibly exciting in today's session is that I have two traders. I have one of our rising traders of 2024, our rising junior trader of 2024. He's going to go through how he uses Journalytix specifically to improve his edge. So that's going to be a powerful insightful from a trader who's now on the upward slope of P&L performance, taking draws for himself, living off his trading performance. And then we'll be also having another trader who's just gone live of the last 2 months, and some of the challenges that he faces, some of the areas of him personally questioning his own career. But he's going to be breaking down potentially the main DOM trade of the month. He'll be breaking that down on Jigsaw, and why we around 8 years ago, Jigsaw and the replay environment was critically important for our traders to improve their drills. Now, before we get started, what I want to do, I just want to make it a little bit interactive. I've got a couple of questions to ask you. So I'm going to swap over screens, and if you can see my screen, slido.com, you can either get out your telephone, your smartphone, you can scan that QR code, or if you're on a desktop, you can go to join slido.com, so slido.com, and enter hashtag Jigsaw. So either go on, either scan the QR code or slido.com, hashtag Jigsaw. Have approximately 4 to 5 questions to ask you, just to get a feel and a pulse for the room, where you're all at, what your current journey is, and what you've been doing in the past month of April, trading wise, if you have been trading. So Craig asked this question earlier on, but I'm going to ask it again. So firstly, oh, that's the wrong one. So let's go back. Which city are you from? Which city? I just want to see where the most of the population, which city are you from? If you can just write that down. I just want to see where you all from. We got Toronto. Most people are from Toronto, Dallas, and New York City, but we have Tel Aviv, Michigan, Limassol. So that's where our office is. The Cyprus office where I am now, I'm going to take you on a tour right at the end of this workshop. If you're up for that tour, I'll take you on a tour. We just started building an outdoor gym. So we have Sydney, New York City, London, Toronto. Those are where most people are from. So it seems like London, also San Antonio, Texas. We have Marrakesh, Miami, Portland, Malaga. So it's just also for you to see over here where you located on the globe. We have also, I'm originally from South Africa, so we have someone there from Johannesburg. I grew up in Johannesburg for 13 years. We have Richards Bay. My dad lives around that areas. And we have someone that's not even in a city: Grenoble, Ireland, Indianapolis, So that's the lay of the land. Now, my very next question is, are you currently trading a live or simulated account at the moment? Just wanting to feel the temperature of the room, the pulse of the room, understand who you are, so we have at the moment we've got about 37 people who have interacted, 40, so majority around 75% are trading live. We have in each one of our offices, we always have junior traders on our internal in-house trials achieving to go live. We're going to be having 2 live traders being part of this workshop today, how they use the tool. So we have, out of the 75 people who have interacted here, we have the majority are live. Okay, so that's so we've got a good mix of a crowd here, just to sense who is in. Which futures products have you been trading this month? I'm going to be sharing with you today which products we've been most active in this month and why. So which futures products have you been trading this month? Okay, and I pretty much can, so we have NQ, ES, NQ, crude, 30-year bond, ESCL, gold, NQ, YMS, so a lot of equity traders, a lot of equity futures traders, W2I. We have some of the currency space, ES and gold. So it seems like ES and NASDAQ are the predominant. So it's going to be very interesting. I'm going to show you a pie chart today of what type of markets that we have been trading. So majority here, equity futures. We have gold as well there. So gold also, and crude. So it seems like ES, NASDAQ, gold, and crude from the 76 those of you who have participated in this. So next question. Describe in one sentence. So this is just going to set the pulse and the theme for today. And it's going to be about a workshop that I'm going to be doing again in 2 weeks' time. A workshop on a framework of how we use data science to increase our performance. It'll be on the 16th of May, 2024. So describe in one sentence and if you haven't had any trade this month, if nothing has worked out this month, I can tell you some of our very top 7-figure traders, 8-figure traders, go through months where they just can't put it together. Their edge isn't in play. They need a new evolution in their framework. They're not innovating, but this is where the Journalytix tool becomes incredibly powerful in how to identify areas that you have to focus on. Reversal longs, long market profile, gap trade in the mini Nasdaq. Yes, they nailed the short on the FOMC trade. So I wonder if that was on the ES reversal, gold reversal. When I was disciplined to my trading plan, do it less than I like. Short NQ confidence in correlation markets, range trade, pull back to VWAP on order orientation. So you can see how diverse people's edges are, but you have to find that what orientates and works for you. So most on pullbacks, quite a few people on shorts versus longs. Let's just keep on seeing some of these responses. Sell off today after 10 on the ES, so kind of momentum long plays. So I bought up a call and I sold for 1,500 bund short. Okay, so getting a good also feel of some of the tools that people use here. So we have, market profile scalping, all around order flow, low volume profile nodes. It's a tactic, special momentum, breakout trades are very important momentum. We speak about that there's also on the Jigsaw institutional course about the momentum plays in high volatility conditions. So thank you, and thank you for participating. I think I have one last question. Have you been profitable this month? Have you been profitable this month? Yes, no? Okay, and we've got to get a feeling. When a junior trader starts on our desk and he goes live, he is not profitable generally in the first month. It's a struggle, okay? And most people, so this is going to be very interesting. Have you been profitable this month? No one can see your answer, your personal answer, so just be as truthful as possible. And at the moment, it's 50-50. I'm going to be showing you today the analytics of 2 of our serial 8-figure traders of what their win percentages are. We're going to be looking at the Journalytix, at their win percentages. These are two traders who haven't had a down year in over a decade, rarely have a down month. Most they'll have 1 to 2 down months a year. Out of those two down months here, they literally break even. They're a fraction of an average up month. Okay, so literally just nose pipping yeses. So we've got some high quality trade, performance here. But those who are no, this will all be about the workshop next week. Is how do you isolate in the workshop in 2 weeks' time? How do you isolate your edge? So you scale your edge, and how do you find? How do you clip away? How do you edge edit out the plays that aren't serving you? How do you develop that patience edge when you don't have edge in the markets? Okay, and we're going to be speaking about that a little bit more on the 24th of May. So I think, is that my last question? Okay, this is my last question. What was the most challenging part of your month? Was it a moment where you missed an opportunity, and because you missed that opportunity, you went on tilt for the next week and you gave back months of work? What was the most challenging part of your month? I have discussions on our trading so we bought an old house over here, and we've converted into 2 trading floors, which I'll do a tour. I'll be stepping out here and converting this into my personal office. But I have discussions in here with traders on all the challenges, whether they're a 7 or 8 figure trader or a junior trader starting out. The challenges never ever stop. Whether it's outside issues, personal issues, sleep issues, you have new children, you are financially backed up against the wall. So let's look here. Dealing with tilt. My strategy not working, same as previous quarter. Discipline, always. Trying to call tops and bottoms. Not sticking to the plan. Spare time for my trading. Large drawdowns and back to sim for a while. Missing opportunity for trade, then no more opportunities based on plan. Being too greedy and coming off worse. Personal issues, patience, not letting my edge develop. I predicted the trend, however, I cannot endure the pullback. Recovering a drawdown. FOMO. So let's look at the majority of answers here is, tilt, maybe, strategies aren't evolving with the markets, discipline, not sticking to plan. Okay. These challenges that you face, all of our traders are consistently facing them. But what's so fantastic and fascinating about this game is if you consistently work, you're not going to be a world-class elite surgeon or world-class tennis player without understanding and working on your game. And trading isn't just for those that are talented, it's for those who are smart, who know how to develop and cultivate a learning framework and approach in the markets. And we'll be touching on that a little bit more today. So thank you. Thank you for answering those. I hope you've seen amongst each other that you're not the only one struggling. You're not the only one that is battling, but the traders in Axia who develop and become high-performing traders, they navigate all the turbulent seasons of the market, and they find a reason of why they underperformed. Was it a skill deficiency? Was it a psychological deficiency? And then they have to work on either both or one or the other. Remember, every error that you make has either one of these two. It's either a technical deficiency or a psychological deficiency. In the beginning of your career, developing edge, it's because you have to develop your technical your technical abilities in whatever performance pursuit you're pursuing. Now, once you start becoming consistently profitable, and now you want to scale, normally it's your psychological deficiency that's stopping you from scaling. So knowing which one to work on. Okay, so let's get started with the main part of the workshop. Just in the chat box, I've just pulled that up over now. I've seen a lot of people have interacted there in the chat. I'm going to now share I'm going to share a new screen. And just say yes in the chat if you can see my screen that says Welcome April Jigsaw Workshop. Okay, thank you, Steve. Thank you, Lee, Jim. Okay, see everyone. I also have my little bottle of water, Cyprus now. It's getting towards 30 degrees. So need to hydrate. And I wanted to ask another question. Let me know if you'd like for me to give you a tour of the Cyprus floor at the end of the workshop. And I'm also going to be showing you at the end of the workshop analytics of the 500K trade that one of the traders executed this past month. Okay, so yes, okay, fantastic. So I didn't want to take you on a little tour if no one was interested. So we'll take you. It is getting dark, so hopefully I'll be able to flick on the outdoor lights too. Okay, so welcome to this April Jigsaw workshop. Now, in today's workshop, we want to rattle your perspective on how you analyze your performance. So you become your own pioneer and innovator on your development journey. I really want to shake, because sometimes all you require is just a different perspective on how you view your development and your performance going forward. And so I'm going to be showing you from the collective wisdom of that hybridized mind of connecting into a high-performing network of how we look at things and how you can implement that in your development as a trader. So what's the agenda for today? Well, we're going to be looking at Axia April performance analysis, and we're going to be doing these workshops for the Jigsaw community every month to 2 months. This has been an exciting evolution that you'll be joining us through 2024 as we also navigate the pause rates environment, the geopolitical events that have been going on from Israel to Israel, Iran, and every climate and conditions that we have to navigate as traders. So Axia performance analysis, a self-coaching analysis. We're going to take one of our rising junior traders. He's going to be presenting here of how he uses the Journalytix tool to create further edge in his game. And then for next session, because I was able to get 2 of our traders today to do presentation, this is quite rare because they're always busy at their desk. So I'm probably going to be keeping this one for the next session on the 16th of May. And I'll be sharing, there's a link over here, is www.axiafutures.com/believe for a workshop that we're going to be hosting on the 16th of May about how to consistently, what's important in maintaining belief, blind belief, or an orchestrated, well-structured, a strong architecture in how you approach your edge in the market and how you cultivate and develop new edge consistently. So that's when we'll be looking from a data coaching framework. Then we'll be doing a Journalytix trade analysis of a $500,000 trade. Even this is a trade when you missed the main news. Okay. Then we'll be looking at the trade of the month of a DON breakdown from one of our junior traders that's just recently gone live. And at the end, a quick tour of the Cyprus trading environment. So, Axia April performance on the Journalytix. We're going to be looking at the winning percentages of our top 2 traders. I want to share something with you. Rafael Nadal, Novak Djokovic, Roger Federer, 3 of some of the greatest players, definitely of this generation, and potentially for, there's the generational argument. These traders, these tennis players win between 80 to 90% of their matches. They win 80 to 90% of their matches, but in the actual points that they win between 50 to 55% of their points. So they win 80 to 90% of matches, but they only win 50 to 55% of their points, which that is telling you that they're winning the big points, the points that matter, the points where you're under pressure, under clutch. And that's why I'm going to be showing you something today that hopefully might just bring a different perspective from of how you could view your trader going forward, and the aspect that we focused on developing our traders. And we go through it on our Journalytix, on the Jigsaw Journalytix platform when we have our coaching sessions and we sit down with our traders, both on our 6-week career program and our 12-month coaching program. We're always discussing parts of your game that you can scale exponentially, the non-linear asymmetrical bets. Okay, and we're also going to be looking at the products that we were most active. So a lot of you were NQ, ES. So let's see if that was similar for the Axia traders. 7 years ago, 8 years ago, we were just mainly active in Eurex, European trading operation. That's changed significantly over the last few years. And then we'll also be looking at products we were most profitable. And this is what we call Edge Echo for group growth. The reason why we share this internally with our group, we want traders to know where other traders are performing well. And that's what I call an edge echo. You echo the performance practices, and we share, well, the traders are doing exceptionally well in these certain profile plays, doing exceptionally well in trading certain news, breaking geopolitical events on certain tweets that are hitting the market from very important listed accounts. And so what are the practices? Always asking, what are the practices? What are the systems? What are the frameworks? What are the processes in order to achieve those strategies? So top 2 trader stats for April. Now, this workshop, I had a baby girl last week, Wednesday, so that's why the workshop had to be postponed by a week. Had my second child. She decided to come late. I made sure that the workshop was going to be well beyond her due date. And so she was born last week, Wednesday, on the 24th of the 4th, 2024. Thank you very much. That's very kind, and I just saw the chat just streaming. So that's why we've had to move it. So these are the stats up until that date. And so this is Elite Trader 1. But one of the first things I want to bring to your attention, and let me just bring up the pen. Look at this trader's win rate. And his win rate sits around here pretty much on average every single month. Okay. 41% win rate for the month of April. 41%. This is our technical profile trader. Okay. Losses approximately 54%. Okay. And scratches around 6.5%. The main products that he was profitable, these are mainly the profile trades for him. Okay. So he trades on profile setups. So I've just seen a question there using the profile and the DOM and the footprint. Okay, he also measures, the sentiment of the market, but mainly feeding. He stalks down profile plays. He watches multiple profile structures, setting up mainly in 4 core markets for him: gold, Bund, ES, and CL. He trades ZF, usually over US tier 1 data. So that performance is usually over, not US non-farm payrolls, the CPIs, and then these are his core stock markets, and his outperformance for the month was in ES, then followed by Bund, that's European 10-year German bond, and then gold and crude. 90% of these trades are from profile setups where he's in the trade anything from 10 minutes up until 3 hours. He's navigated, he's graduated, this trader has over 10 years experience now. He's graduated by scalping. We always, our traders try and eliminate time variance. When you're starting out as a trader, you're limiting time variance. So all of our traders who graduate when they start trading, our longer term traders are 3 hours. Sweet spot traders. But this trader was taking trades that were anything between 1 minute to 5 minutes. Okay, we have some very micro strategy traders who trade, simply in and out within milliseconds. But this is, I'm showing you 2 of the top traders for this past month in April. So profile technical setups, and this was his equity curve. This is the 0 line. Okay, we're not showing the actual, but this was his equity curve and from around the 10th of April, this is where his performance skewed. Okay, so just wanted to also show how you're managing an equity curve. Now I'm going to show you another trader number 2, who's been one of his most profitable. He only made the profits literally of 2 days. Okay, was losing constantly throughout April. His win rate for the month is 37%, losses 58%. But this trader is renowned for, when it's in the wheelhouse, he's renowned for pushing the boundaries on size. He will go 10x on size. Okay, these traders are trading literally. I see someone seems like they're not trading every single day and waiting for. So the profile trader is much more selective. This trader is very active. He'll trade a lot of order flow days, trades in there. He's normally fishing in the markets, and then when the asymmetry comes, that's why he has a lot of losses, and then he's able to scale his size. Now, your scalability of size graduates as more time goes by. When we start a new junior trader on the desk, we normally give them, they have at their disposal up to 5 contracts across say 5 to 6 markets. They trade mainly with 1 and 2 contracts at the beginning, but for conviction trades, we want them to put on those 5 contracts. We want to see on those high conviction trades, are they going to scale? Are they going to take 4 days of losses out with those trades? Now, we have traders in the team, very senior traders who have incredibly high win rates, but they also have very, they're looking for 2-tick, a 2-tick loss or a 2-tick winner. So there's a whole variety of edges. I'm just showing the 2 traders who have performed over the past month, and this was literally in the space of a day. And we'll be speaking about this trade a little bit more at the end of this workshop, which was that over here. Okay, so what products have we performed in this month? What are the Axia products? Where have we lost money and where have we performed? So our product that we performed the most this month is the Bund. Okay, the European Bund, followed by the ES. Next, the 5-year. So the 5-year has mainly been off the data points. I'd say most of the Bund trades have been off profile plays. ES, most of our traders who make money in ES are order flow scalpers and traders. Okay, then the next is Brent. So Brent oil, followed by crude. Okay, and then this is an interest rate product from some of our short-term interest rate traders. And then where have we lost in the month? Well, the biggest loss for the month has been in the Japanese yen. These have been traders who've been trying to preempt on yen intervention. It's been tricky. They've been more stealthy. But so we've been as a team, we've been interacting, we've been breaking down the analytics, we've been breaking down where can we perform better? How do we reduce that loss? Why are our strategies failing in that area? We've also, the third losing market is NQ. Okay, so NASDAQ hasn't performed for us as a group over the past month. Now, I've just shown, now let's look at the activity. So you all answered, there were many that mentioned that they've traded ES, NQ, gold and crude. Well, ES was our top traded market for this month, okay, for April, ES, followed by NQ, followed by European bunds, followed by gold, crude oil, Brent, and then these are the rest. And this has been the performance from a group as a collective that from the second week of April is where most of the performance happened, when the volatility started stimulating. A little bit more vol came to market, especially with the Iran Israel kind of shook up the markets more. We had earnings. We also had some consider over here. FTSE, it doesn't even, FTSE traded 1%, some good performance on FTSE. But as the earnings started coming through in the market, started creating more vol, the back end of the last 2 weeks of the month is where most of the performance. Now, we go about breaking these performance downs. We expect all of our traders to break in. So what we're going to be sharing today is how exactly one of our rising traders for 2024 goes about using Journalytix to improve his game. So it's going to be incredibly exciting of someone in the trenches who's gone through the whole journey of being an unprofitable trader, not knowing if he's ever going to be making profits. And that's the game. That's the game in the beginning, because you don't have the skill set. You're having to accumulate the skills. You're having to understand yourself. That the market is going to unearth all the patterns that you have developed over your entire upbringing, all the areas that you've hidden away from the world. The market will find it and will tease it and will let you break your plan. It'll let you go on tilt. It'll let you, kick in tantrums. It'll let you feel fearful. But what are you going to do to overcome it? It's always you get faced with a challenge. What are the systems that you have in place to not repeat that error over and over again? Okay, so I'm going to be handing over to one of our rising traders of 2024. He hails from the northern parts of England. He is going to be presenting from our second trading floor, and this session is one of the aspects that are so powerful. With using the Journalytix tool is you need to survive to produce the data on yourself across the market environment. The more you survive, the more data you bring across yourself, the more data you have upon yourself, the more you can dissect where you truly have the edge and where you truly do not. And then it's as simply as cutting out the areas that you aren't performing and observing and maximizing in the areas that you're resonating. But a lot of people don't know how to protect their edge. They create a lot of attritional warfare on themselves before their edge comes into place. They might waste bullets, emotional capital. They might waste monetary capital. And how often does this happen to you, where your setup sets up, it goes in exactly the direction, but somehow you've blown yourself out the water on 50-50 trades over the past week, and you aren't able to scale the trade that you really planned for, that you really believed in. Okay, has that happened to you? So we're going to be looking at the power of the Journalytix tagging feature. And so this is a case study, and I'm going to be handing over to Alex. I was going to check if Alex, are you there? He is there. Fantastic. Alex, if you can unmute yourself. So I'm going to present you Alex. He's going to share his screen, and he's going to be presenting a show of how he's performed in April, but more importantly, how he uses Journalytix. Alex, can you hear me?
Yeah, can you hear me?
Perfect. Okay. If you can share your screen, Alex, and then we can get you. So Alex is on our second trading floor. So we've got 2 trading floors at the moment. He actually trades on our first trading floor. He's doing the presentation on the other floor. Okay. I'll hand it over to Alex. I can see your screen, Alex.
Okay, perfect. Yeah, so for me, really, it's a little bit of background is when I started, I basically was making enough money to get by, but never really breaking out and like having a good profitable run. And if I did, I'd start to give it back when markets went quiet. And that might be because I grew up around the runner for the first floor in London, and there was quite a lot of news traders and event traders. So I kind of picked that skill up quickly and then would give the money back, just trying to do other things and trying little trades throughout the day when volatility was lower. So yeah, today I was going to look at the biggest issues I've seen with other junior traders, myself, and people that are struggling as traders, then the huge unseen impact of this issue. And this is where Journalytix comes in for me. And then just really looking at the true cost of how much this actually costs you in P&L over a year. So yeah, the biggest issue I see with like junior traders is you come in and you try and basically trade all day when you have no edge. And then you've got no edge and you start to lose a bit, then you get annoyed, you'll make that back, you overtrade, then you're tilting, and then you're overtrading some more and you've got no edge. It's kind of a bit of a cycle that goes round and round and you erode P&L. So yeah, when you start your journey, you're naturally going to have no edge or small edges or little edges in the market. And this kind of builds over time. And that's where a lot of juniors actually spend a lot of time defining what their edges are, creating edge, making sure that they actually have edge before then deploying it into the market. And the place I actually see this most show up is in technical trading. And I think why this is, and I speak to a senior trader on our floor that I speak to a lot, and we both kind of came up with the same reasons, is technical trading doesn't have a start and an end point. You can make a technical trade anywhere, even if you've got a system. You can go, oh, this looks like a bit of an area to buy. Oh, there's a little level here, I'll buy through the level. And there's no end point to that trade, and there's no start point. So some of the things I will trade, like bond auctions, month ends, OPEX, there's a defined start and there's a defined end. Data, there's a start and you can kind of define the end like 5, 10, 15 minutes in. So yeah, you can find a technical setup absolutely anywhere. And then most junior traders, strong traders, have not actually defined what their technical setup is. And you just kind of jump in and out of the market, trying little things. And I was actually reading some of the questions like overtrading. And that's where the overtrading comes in, because you're overtrading because you don't know the cost of what you're doing, because you haven't collected all the data and you haven't got that defined edge that would say, this is my setup. When my setup's here, I just execute. And when it's not there, I don't touch anything. And yeah, most traders I've known have no idea of the actual cost this has on their P&L over a month and over a year. And when I did this, so the senior trader that I'm actually with in Cyprus pointed this out to me, is like, you make money, but how much do you give back in just crap trades through the day? he basically made me write them all down in Journalytix and tag them all, and then stare at that number hard in the face. And then you realize how quickly, by eliminating that, your P&L over a month just kind of, instead of just wobbling around, just kind of sits there and goes up and up. So the reason people don't know the cost of this is basically they don't track the data and track each trade, tag each trade, so they know what trade that was. Because it's easy to remember in your head when you take the trade, but you go back at the end of the day and you've done 20 trades, let's just say, you're not going to remember exactly what each one of them was to go back over. This gets obviously easier over time, because once you start tracking the data, you'll just naturally probably do less trades. The other thing I think is it's easy to remember them winning trades where you just you took a little trade and it's been a big winner and you're like, oh, this is brilliant. But you don't remember all the small losses, and they're the ones that add up, the small loss, the small loss, the small loss. And then this kind of leads into this. You believe what you're doing is profitable over long term, but you don't have the stats to actually tell you I have edge and this is profitable. And then, so yeah, what gets improved, what gets measured gets improved. So how I kind of tag my trades using Journalytix. So I basically go down to this playbook area here, and you can create different playbook trades. So I'm more of a macro comment, events, and volatility and flow events. So naturally, a lot of these you'll see are all to do with kind of more events and volatility than technical setups. I have something called 1 minute technicals, 5 minute technicals, and yeah, you'll see when you look at the stats what happens in them. But mainly, we're kind of looking at these kind of data. I have data crap. Data crap is something I shouldn't have hit, because that's a problem I face. Is the data comes out, I might hit it even though I've got no plan to hit this, and try and track what that actually cost me. So yeah, I would then basically make a playbook of all my trades. Then you go down into this journal queue for me, and each trade you have, you basically tag the trade. It's just a little drop down here, and that'll give you all your playbooks. And then each trade you do, either straight after, if you've got time, the end of the day, just tag them one by one. It's really simple. Just drop down, tag, drop down, tag, drop down, tag. And you've got to do this for over a month, really, to get any decent data. And yeah, it'll just have all your trades listed down there. So then you go into your profit seeker at the end of the month. And this is where it becomes key, is because you might remember that one technical trade that worked well for you, one technical trade that didn't work well, and then you forget all the others in between. And this is where either each week or each month, I'll kind of tag all my trades and look into this and see, like, really, I can have my idea of where I'm making money, but where am I actually making money in the market? And then if we break down mine, like I said, it's more macro basis, central bank events, data fading. This was in, March. So this was my March stats. This was basically two bits of data. It was fading the CPI and it was fading the NFP. Data hittable, this is basically data that I'll go with, but it's not a massive outlier for me. Auctions, they've been a bit quiet. Open drives, that's one of the only kind of set technical plays I'll trade. Fading comments, don't really do too much of this. Default, that's probably one thing I forgot to tag. 5 minute technical setup, so when we get down here. Data outlier, that was pretty much one outlier piece of data that I traded that didn't work. Month end, didn't work too well in March for me. OPEX wasn't very good, and then normally better areas. We go right to the end. Comment. Okay, this was one comment pretty much. So you'll remember, if something looks really out of place for how you trade, you might know exactly what it is. This was a Ethereum comment in the futures that, yeah, really went quite bad. So I don't really count this, but this is the bit I'm really looking at, is this 1 minute technicals. And these for me are trades that I've not pre-planned kind of thing. I see something going on, I see a bit of a level, and I'll try and take a little level break, play a daily break. That isn't really my edge. And you can see straight away, I know for a fact this is probably about $8,000–9,000, and this is cut down massively from what it was before. So this is where, yeah, once you start tagging, will become really important. And if I saw like people who were up on the month down, I guarantee the people that were down, if they tagged over this whole next month, and then looked at the end and saw what exactly they were losing the money in, and you cut that out, you'd probably be up. So Journalytix to me shows me the true cost of this. So if we just use some simple numbers and say the cost over a month was $2,500 of this kind of, for me, I would call it 1 minute technicals. For you, this might be something else, just kind of tilting trades or like revenge trading, whatever everyone has their own little issues that they deal with. Whatever that issue is for you, you'll see the cost of that over the month. If you don't track this data, you're never going to realize how much money you're binning off like this each month. And then you just do the maths. So you do 2,500 times by 12 months. That's 30,000 a year now that you've just binned off straight in the bin, just doing things you shouldn't be doing. And I bet as a junior, that number is probably higher than 10,000. And you'll be surprised over a month of just little trades. So then you start doing the maths on the higher numbers. You get 5,000 a month. You're doing this. You've just been 60 grand in P&L off a year. 10,000, 120,000 a year, and 20,000, $240,000, so nearly $250,000 a year. You're just thrown in the bin by just doing these little trades. And you wouldn't know that unless you tagged and actually worked out where you're making your money. So then on top of this, I just basically made a little graph just to show you what happens. So if you're not tagging your trades, I've just made up some random P&Ls down here that you might see in like a junior trader. This is kind of where you are in December at 43,000. You're tagging your P&L, so you basically take back that amount. So you add back the 2,500 a month that you're not binning off now. Now you're at 73,000. So you can see how much of a difference over a year. You might see it a little bit on a month, but over a year it makes. But then it gets worse for me. So if you're doing that and you're binning off that money, you don't even realize you're going to keep doing it. But if you then realize you're binning off all this money by tagging your trades and you get right, I'm going to cut out all of my 1 minute technicals. These aren't clearly, I haven't got an edge in this at the minute. Doesn't mean you won't in the future, but right now let's either reduce the size down to the smallest size possible just to get a rep in, or absolutely cut it out your game and just Evernote them, whatever you need to do, but just don't take them. So now you stop binning off the money and you reallocate that risk that you would have lost to where your edge is. So that's 2,500 a month. That's 5,000 a month. Let's say you then, for where your edge is, you up your size on them trades by 10, 20% on the real edge opportunities. So if we go back, for me, this would be upping my size on data, comments, but obviously that was a one-off comment. Central bank events. My clips are now going up and my confidence on these is going up. And then you'll see then how this then really changes your P&L. So you reallocate all of that risk that you just wasted into your best trades. And then this is when you start to see the full scale for me of the damage you're doing to your trading career. So now the green line is now 20% extra. That 20% of extra risk you're putting on the trades because you've cut out all of the negative edge things from your game. And in 1 year, just on these smaller P&Ls, you've just doubled your P&L for the year. In just this one simple step for me, and it's not a hard process, but it will really show you where you're losing the money and where you're going wrong. And most people, I think that if you're kind of just profitable, not profitable, but you're close to flat, if you tag your trades like this every time and look at the stats, and at the end of the month, just it doesn't matter if you like the trade or you don't like the trade, anything that's negative and really negative just goes. You just completely cut it out your game. It saves you time sitting in trades, mental energy. It means you can up your size in your better trades, and you can just double your P&L in a year by cutting this out. And you don't see this over 1 month, not over two, but it's when you go through a 12-month period, you'll see this. So yeah, tag your trades, because Journalytix actually does all the hard work for you. You don't have to build out this at the bottom kind of thing of where you're losing the money. You literally just have to put your playbook in and then tag your trades. And then it will give you all the information you need. It will show you where you're making money, what products you're making money. So if I went back to mine and looked at the product thing like Alex did for the company, mine would be in the bonds, the S&P, and the 2 year as the main winners. And then at the bottom, there'd be Ethereum because of that one comment. And you can kind of break this down. Maybe you're over trading one market and it's your most traded market, and that's negative. Maybe you have to cut that market out a bit or lower your size, increase your size in the markets where you are making money. But without tagging these, you're just going to have no idea how much money you're losing and where that money could be better spent.
Thank you.
I think that's it.
Yeah, thank you, Alex. And what I'm going to, what I will, I just have a question for you, Alex. Just someone has asked a question, but I also wanted to emphasize, and I've heard, you've taken notes of what Alex has mentioned is sometimes you could be so close, you could be just below break even, and you've collected the data. It's the power of the discipline. It's the ability to be honest to yourself, because the data is staring you now in the face. And so you can kid yourself without having the data over a month, 2 months, 3 months. You can keep on kidding yourself, keep on participating in trades that you keep on losing money. But when you see it raw in your face, then you have to have the discipline and the profession of saying, I need to cut this out. I need to address this. I need to cut this out. And in the areas that you are showing profitable now, you're only showing, there's only 3 days in the month that really made sense to you, that you really understood. Well, okay, those are the 3 days. And those, the configuration of plays, order flow patterns, profile patterns, certain comments or macro patterns, those are the ones you focus on. Then you have to realize, okay, everywhere else, if I only have edge, 10% of the month, then, and I want to participating in the other parts of the month, well, then I have skill deficiencies in other areas. And so what the workshop all on the 16th of May is about is how do you orientate yourself across different environments where you have skill deficiencies, and bringing that to the attention of your game so you can improve upon, so you can make money 50% of the time. Our very top traders are only making money, within a month, sometimes, 30% of the month or less. I don't know what your stats are, Alex. But Alex, I have a question. Just someone asked here, when do you do the analysis? Markets are open from Monday to Friday, 8 until 10 o'clock European time. Do you use your weekends for this analysis and your playbook comments?
Yeah, so I will, tagging the trades, I will try and do first is straight after the trade, if I can. If it's volatile, I'll do it as soon after as I can, because it's so quick to do. You just literally pull it up and tag. Really, to get any good data, I'll look over it at the weekend as a general idea of what's happened that week. But really, you want like a month's worth of data, because even in a month, you can see how one comments are actually quite a strong part of my game, and it took one big comment to kind of skew that. So the more data you collect over time, you're going to get much better analysis. But you can do it on a week by week basis, because if you've had a bad week and you can get confused, you can get confused like, oh, where's it gone so wrong? I don't know what's gone so wrong for me this week. But you can kind of have a little look over and see like, where have I lost some money this week? And then you can kind of go deeper into why have I lost some money there. Maybe that was a great explanation. It was a big comment. It went wrong. That's where I lost some money. Or maybe it was that you were overtrading, and then you can look through. But I think a weekly dive into it, just so if you've got a massive error in your game, there's one trade that you're taking and you're just losing all the time and you're just binning off a load of money. The quicker you can correct that, the better. But over a month, definitely, like as a monthly review, it's a really good thing. And one thing I'll say is that when you see that number, it's normally quite painful. You can't really imagine it until you see the number, but when you see it for whatever it is for you, it's quite a painful thing to look at, and there's no hiding from it when it's a stat and it's a figure sat in front of you.
And when you create that so-called house of pain, when you create, pain is such a powerful learning mechanism. If you face it and you improve upon what you need to do next, and Alex is also explaining here, effectively, you're trying to compound your edge, and you're trying to, the reverse compound of where you don't have edge. And so that compounding effect over time is profound. Just looking at those charts, and I know once Alex started doing this in his game, and started becoming more religious on this, from the beginning of the year, and I know February, March, Alex just became incredibly ruthless and disciplined in sticking and being patient in his areas of edge. Now, he's always working in other areas, but he's not devoting significant risk capital in areas in his what we call the research and development department. And just another aspect of Alex mentioning on the weekend. So during the day, the efficiency of Journalytix, just in tagging each trade. But the weekend, remember, when the markets are closed and you detached from the markets, your brain, and I actually have working with someone who trains the US Special Forces on creativity, and I'll be sharing this in a very exciting workshop in the future. But your brain on the weekend is detached from the market, is more relaxed. When you're more relaxed, you're more creative. When you're more creative, your problem-solving ability is significantly higher. So you can see a meta perspective of your game looking at the data on the weekend. So this is where all those aha moments come. So during the week, at the end of the day, like the person asked the question, 10 o'clock, you're tired. It's very hard to analyze and make big leaps in your game when you're extremely exhausted, been fighting risk all day, been focusing on the screen. So that comes on the weekend, but your ability to tag in moment, in real time, so you don't forget, so you provide yourself with that information during the weekend. And I've got one more just before I let Alex go. Actually, does Axia standardize the trade tags? So we have two levels. So we have company level tags, of where we analyze, for our coaches can analyze our traders over specific type of events, certain place. So we have company level tags where the coaches and the performance coaches, mentors, our risk team are analyzing the traders, and then traders do their own individual tags because it's what's the resonant frequency for themselves. Okay, so that Tom asking that question is a really good question. So Alex, thank you very thank you very much for sharing your time. Alex is also a slave to his screen, so he's going to go back and potentially tag some trades. Today, Alex had a fairly good FOMC night last night, but he was a little bit more impatient today. So took a few. Can you describe your day today? What you didn't like about your day, or what you did like?
Yeah, so FOMC went quite well for me last night, and that was something that's my stronger point, and I prepped a lot for, and working on the nuances of what he's saying. Yeah, and I kind of this happens the odd time to me where I kind of came in with a bias today, a catch-up trade in the buns, didn't really wait for any access, and just tried to express my opinion straight away, early morning, even before the open, and yeah, it didn't go very well.
And where does that tag go into? What does that tag?
5-minute crap technicals. I mean, it might
with
even
a biased opinion. Yeah,
biased opinion. It might even get its own one, because I haven't done that in a while, to be fair. But it was just something I was thinking, because they were closed yesterday. There's not many FOMCs where the buns are closed. So, but yeah, no, it's the best thing. And the last thing I would say is, when you are tired at night and you're stressed, whatever, lost all this money, sometimes just sitting there and tagging your trades is the best thing, because at least you've got an answer. Then you're not sitting there all night going, "Oh, what's going on?" You know what's gone on there. The stats are going to tell you on Journalytix, and then at least you can come up with a solution instead of just questioning what has gone wrong.
Right. Thank you. Okay. Thank you so much, Alex. And if future Jigsaw workshops, if you'd like us to have someone junior traders such as Alex, well, you wouldn't classify him as a junior. He's on the brink of junior to senior on his journey, because he's now a profitable trader, but he still has high, big ambitions. But if you would like to see more of these, then just let us know in the chat. Just say yes if you'd like more of these, where we're having our traders in these sessions. So thank you, Alex. We're gonna have another trader who's just literally gone live. He's gonna come on. We're gonna keep your screen off for now, because he's not gonna go right live just this moment. He'll be on in around 5 minutes. Okay.
Perfect. Thank you.
So
I'll mute this now. Yeah.
Thank you, Alex.
Thank you.
Okay, so we have you should be able to see my screen where it says Data Science Coaching Framework. Now, because I had the opportunity to have two traders offer their time today, I've reserved this section for the 16th of May. So I will pass in the link in the chat in the Zoom chat. So I'll post this in the Zoom chat for you to, so you can't see my screen, just your camera. Thank you. Let me just share it again. There. Thank you for letting me know, Samir and Nico. So in this data science coaching framework, I'm going to be showing you a specific framework that you can employ, that you can navigate different environments in order to optimize your skill and edges in the various 4 main areas that we focus on as a firm, as a team, as individual traders within the company. But and it's going to be a case study of a junior trader who was on the brink. And I've had this over the last 16 years, been involved in the market in 20 years, been developing traders for almost 16 years now. And out of those 16 years, I've had multiple traders, very talented traders, just break down in tears, stop out. And I can tell you the fundamental number 1 reason why traders stop is not because of no money, not because of an account blow up. The number 1 reason is just lack of belief, loss of belief of will they ever develop the skills? Because I've had traders who blow up, who have blown up accounts, are able to recap because they truly believe in their edge. Just something just didn't go to plan that day, and they tilted and they just did something incredibly stupid. But the number 1 reason for traders stopping is not because of an account blowups or money or any of the reasons that you'd absolutely think about. So we'll be discussing on the 16th of May. And so what we'll be discussing is also, you need to judge your edge, not your P&L. And so when I'm going to be showing you, and I'll actually just hop over onto the next screen over here. On the 16th of May, I'm going to be taking this table over here, and I'm going to be explaining you these 4 core areas and understanding your edge skill set and what system and process that you need to deploy to get better in these specific type areas, whether it's technical trading, central bank trading, flow, order flow, data trading, or near and news geopolitical environments. Because as a futures trader, you can be a holistic trader and navigate every single environment. Now, we have very specialist traders, some traders who don't trade any central bank event, who only trade certain momentum plays in oil and gold, and they've been doing that for 5-6 years, and they've got deep, big edge, and they're in the trade for less than a millisecond, and they don't care what central banks are out there. But the trader that's evolving, adapting, and so I'm going to be showing a system, kind of using a data science coaching framework that you can deploy and employ yourself going forward. And so that's on the 16th of May. So, and again, what we'll be focusing on is what Alex was speaking about today, is the importance of analyzing these dips in your equity curve. Okay. Now, today we're going to be speaking about a trade that probably, this was a trade. So this is an actual individual junior trader that's just gone live. Okay, he's going to be presenting soon. Of this trade over here, some of our traders did exceptionally well on this day, on Friday the 19th. Okay, and this trade over here, on this day, he made approximately $1,500 in Bund. Okay, this specific trade that he took on, he's very good under these conditions when there's certain correlations happening in the market over big geopolitical or big risk flows in the market. Now, what is not good, the day before, he was trading a technical NASDAQ trade, and he lost a lot of money. And on this day, he came to me all distraught, and we had a really good discussion, just analyzing and dissecting this game. And so what are you doing on your analytics at the end of each week, at the end of each day, at the end of each month, at the end of each year, by bringing the data to the forefront and focusing on why are these equity drops happening? Because the very top traders in our firm, when they're moving up, they edge protect. That all of a sudden, when they're not seeing any edge in the market, their risk management and their money management become their edge. They're not having the Eiffel Tower equity collapse, which most retail traders have. They edge protecting finding out what are the new skills of this environment. But until they find the edge or the skills that they can navigate this environment, then they start deploying more risk capital. And so senior traders who've been in the game, 3 years, 5 years, 10 years and more, they had these types of equity curves. Pauses for periods of time, then a rate of change, delta change, equity curve moving up, and then a pause again, as opposed to what happens to most traders. They go up in the act, they might go on a good run. All of a sudden, there's no edge. They think their game sucks. They think none of their strategy is working. It's just, no, their strategy is not working. In this environment, all of a sudden, they just give back everything, start over again. Okay, so what we're going to be doing over here is we're going to be looking at, this is again, sorry, as I mentioned, this will be the Data Art and Science Coach Program, which will be focusing on the 16th of April. Okay, on the 16th, we would be identify the opportunity structure of your edge. So this is a trader that has been working religiously games, fundamentally so strong. His understanding of it's his technical game that he still needs to improve upon. But we're going to be looking at this trade over here. Okay, he's going to be going through on the Jigsaw replay, and he's going to be breaking that down just after I show you the top trade, one of the top trades of the month. And this is a trade that happened where a trader missed the news, okay, and was just trading flows and correlation edge. Okay, this was the Iran and Israel night, okay, where at 2, 3, 4 o'clock in the morning, this was all the trades. These are the markets he traded. And so he will go and dissect. And you'll notice here, as the European market opened, the cash market opened, there was another P&L over here. And we're going to be talking about not so much this trade, but where most of our traders made money on the 19th was on the reversal trade. The post, and this is what we'll be speaking about, is how do you get on a reversal news trade where you don't need news, you don't need the Bloomberg, but understanding in this instance, there's a lot of tweets coming out. And how are you going to go about using the Journalytix, how are you going to go about using replay technology to improve upon your game? And I'm going to be introducing you now to this gentleman over here of what you can do and how you can go about making P&L when you have missed the news. And so this is so-called the news reversal trade. He's going to be explaining it all. Luke, are you there?
Yes, I am. Can you hear me?
Yes.
How's
perfect.
it going?
Yes, good. So Luke's all the way
hello.
from the East Coast, and he's in the island in the far side of the Mediterranean in Cyprus. So this is a journey that he's been on, and I'm going to be handing it over to Luke. So the trade that he took on here was also a trade that the collective group did incredibly well on the morning of that Iran-Israel on the reversal trade. And so you're going to be learning a little bit more about a reversal news trade. So we're going to let Luke share his screen.
Great. Yes, let me go for it. Okay, excellent. Everybody let me know if they can see this screen. We have a chat here, right? Yeah, perfect. Everybody can see this, yeah? All right, hello everybody. My name is Luke. I'm a trader with Axia. And, Alex, like Alex said, I'm going to be talking about a trade we took. It was a de-escalation trade on the back of an escalation in the Iran-Israel conflict. And then we're going to go through on Jigsaw using the replay to see correlations on the ladders, to see how you can really lean on correlations between asset classes to give yourself more confidence in the trade. Okay, so this is a little bit just, I just wanted to write a little bit about sort of where I see my edge in trading as. I think my best trades come from when there's big themes in the market, right? And fundamental trading is all about interacting with these themes and understanding how narratives about these themes develop, right? One of the biggest things is where are we at in the timeline. So I'll show you a little bit about how the timeline of this conflict unfolded. I'll talk a little bit about how we plan for some scenarios, right? So, the tension between Iran and Israel, they escalated and then came down a little bit and then had a really big surprise escalation. So I'm going to talk a little bit about this timeline, right? So we have, a slight escalation. There was an Iranian embassy in Damascus that was destroyed by Israel. And, over that week, we started to see some risk-off correlations. Gold, oil up, bonds up, equity selling off. This is your first sort of hint as to say, okay, we could have a theme here. We could have a story here. Let's form the narrative and see how things begin to unfold, right? So just as we thought this theme was about to kick off, we had an Iranian attack on Israel over the weekend, right? But the narrative quickly came into both sides want to de-escalate. Both sides want aggression to halt, right? So we actually saw some de-escalation flows after that weekend attack, which was really important when we had this massive overnight attack, which was a huge surprise to the markets. We had been getting sources that Israel, while they were still keen on doing, per se, a retaliation, they surprised everybody by saying, oh, we're going to do it over Passover. We're going to delay it. Nobody was really sure. There was a lot of, conflicting news coming out. So this trade, if you were able to get on it, was a huge trade. Unfortunately, it was in the middle of the night. Nobody was really tuned into the idea that this could happen on this specific day. So what we had to work with coming in was the afterflows of that trade, right? And so after you get this attack from Iran, you get this from Israel on Iran, you get this immediate denial of this attack, and you get a coordinated de-escalation in the news. And I'll show some sources here that I pulled. So you can see like the timeline, right? After Israel attacks Iran, you get sources saying that this attack was carefully calibrated, right? You get Tehran playing it down, right? You get both sides saying no more retaliation. It was a very coordinated attack for both sides to save face, right? So when I show you the charts on here, you can see massive bids in gold and oil, massive bids in the Bund. These are huge risk off flows happening very, very early in the morning. And so, once you get sources that this sort of event is going to be at the end of the day a de-escalation, right? This is a safe to face event. Then you can take a look at these charts and you can see immediately where have we come, how far have we come, and where can we go from here, right? So I arrived in the office about 6:15, 6:30 in the morning, and that's what these charts are up to, right? So upon arrival, I can see that gold did an extraordinary move, but had come all the way back to basically where it was at before this attack started, right? Whereas you get oil and Bund have retraced, just about half of the move. And you can see the SP 500 has also retraced about half the move, but, I'll show you how I leaned on the equities in the trading. But yeah, so looking at these charts, it's important to use, or as I use it, to gauge risk reward and what markets you want to be in, right? What markets are going to give you the best prices, right? Because this is sort of trading where you have to lean more on, per se, a position trading, where you have to take a view and say, okay, I'm seeing the news coming in. I know that this is going to be a de-escalation trade. I know that these moves can fully unwind, and at that point, I want to be able to take a position based on where I think the best expected value for me is, where I think the best risk reward is for me. So I played out this trade in the Bund, right? So there was an extraneous bid on some German data at the 7 o'clock open in the Bund, right? And you get this move up to 90s in the Bund. And I really felt this was where my risk reward was skewed, right? And I'll show you a little bit as we use Jigsaw replay about how we can use correlations to see how this trade evolves. This trade was taken in three parts. I had my initial access up at 88s, 91s. And then there was a comment that comes out a further de-escalation comment from Iran saying, this is the end of it. We don't want any more attacks. This is the end of our aggression, right? And you can see the oxygen coming out of the markets. You can see this risk that we priced overnight absolutely being withdrawn from the markets and in a quick way. So yeah, like I said, I'm going to show the correlations on Jigsaw, and I'm going to see how we lean on the expectations of this trade versus how we use proxies, i.e. the equities and other U.S. bonds, gold and oil, to keep ourselves in this trade and to give ourselves more confidence in this trade. So yeah, like I said, my first entries was access. My second entries was a comment based add to my trade, and I do also want to talk about my exit and how I could have managed my exit better. In this position, I took a little bit of heat, especially after I'd added to my position and it had come back to my price. And so, yeah, I'm going to talk a little bit about how this unfolded. This video. Okay. So, I separated this video. This is a trade that took place over about 2 hours, but I cut it into certain parts. So, we're going to start this video off. You can see I have the replay in the corner. This is about 7 o'clock in the morning. This is where our axis comes in on the Bund. I want to note in the beginning of this video, as I begin to play, that let me just point out, on the left, we have the Bund. Our ladder in the black is oil. We have yellow as golds, blue as our US bonds, and then red are our equities. So on the left here, we have the S&P 500, and on the right, we have Euro stocks. So ideally, you're going to want to be seeing offers on the de-escalation trade in the bonds, oil, and gold, and you're going to want to be seeing bids in the equities as a more of a risk on, trade. So let me play this video. So this is the beginning of my trading. This is obviously is simulated because we were using market replay, but it's a good gauge for how powerful the software is because we can relive the event in real time. So here we're going to get a bid. We're going to get a bid off the back of some, I don't want to say meaningless, but some unimportant German data that come out. We get this anomalous bid in the Bunds, right? This is more of an axis trade. In reality, up here I was getting prices at about 88 and 91, but I also want to turn everyone's focus to how after this bid you get a really convincing stall out in these bonds and a continued dribble off from these prices, right? And in the context of this de-escalation trade, this is a great example of letting prices come to you, about how, even the slightest bid in prices can be great access in terms of a bigger idea.
Yeah,
so,
and I just want to add on that, one of the core and it happened, I remember in the global financial crisis, when all the markets are in sync, going in in the direction, in this instance a risk on, so the equities are going bid, gold offering, the bonds are offering. In those moments, you'll get, say, for example, any data points that happen in the day. If the data point are going anti the direction of the trend, those are opportunities to get in. But what you're looking for on the ladder, once it bids up in this instance, you're looking for that little stall moment to find a cheap entry, risk reward entry. Okay, if that makes sense.
Absolutely. That's a great point. And yeah, just responding in the comments. Yeah, I find, and I learned this from another big trader at Axia, the color coded ladders we have here I find very important in terms of, as a news trader, I think speed is optimal, right? I want to know exactly what ladder I'm going to immediately. And then it also helps to see correlations. Okay, so this was a moment I picked out about, as we're coming on side on this trade, about really how you can start to lean on the correlations to give yourself more confidence in the trade, right? So we see the US bonds are starting to dribble down, right? And on the right, you can see a really, really powerful bid start to come in the US equities. You can see oil is coming off very strongly, right? So this is a good inflection point that I found as to where I think my confidence was greatly increased as to when you saw these correlations come back into the market. And I marked this as a potential places to where I could have added to this trade. I thought playing down to these 55s, this low of this little block that the Bund had made was, a really good target for an add as well. And since this was a trade that heavily leaned on correlations, I felt that this was a moment where, you can get conviction. One thing I wanted to note as well, before I play this, I'm going to show you the part where I add on a comment. You can see how powerful the ladders become, because I showed you before the golds had basically taken its lows already. You'll find that, and this was a very unsettling thing during the trade, you'll find that the correlations in golds had had started to come off in the middle of this trade. And I think this is due to two factors. Gold has had an incredible bid over the last 2 months, and it's kind of detached from other markets. There's a lot of Chinese buying. There's a lot of other anomalous factors, and the idea as well that gold had come all the way down from where we were at the peak of the escalation. So I'm going to play this. So this was a comment from the Iranian ministry saying, we don't want any more escalation. These attacks are over, and you'll see how you get these really powerful moves right now. And luckily I was hovered over this bund that I was able to add at 59s there. This is a simulation of a real trade, so obviously the execution is not as perfect as it would have been on the actual ladders, but it's important to see exactly how these correlations are coming in, right? You can see powerful bids off this move in the equities. You can see gold's coming off. You can see oil's coming off this as well, right? And I think the important thing as well is seeing price response on that. You can't expect to take a huge move off that, but seeing price respond in the way that you would expect it to see of a comment that you want to see when you're playing a de-escalation trade only adds to your confidence, right? So that's not a place where I would add and expect to take 30 ticks out of that move, but that's a place where my confidence has come way up on the idea of the trade, right? So as you can see, the average price of my trade has come down because I doubled my size in that moment, right? So we've gone from I've gone from an average price of about 87s, 88s down to 72s. You can see that here. Yeah. So 87s down to 72s. So I'm also going to show you a little place where I took a little bit of heat on this trade. And the biggest thing here is using this replay to see exactly how these correlations are coming in, and what you can lean on, right? So another thing, like I said before, right, gold has broken these correlations, and this bund is testing this really important level here, right? And this was a really key moment in this trade about saying, okay, like my average price has gone down, I've doubled my position. How can I try and stay in this trade? And I want to emphasize again, the correlations are so strong here. You can see these equities are getting a bit, they're almost at where they're started overnight, right? You can see oil is gunning for the lows. The US bonds have come off and stayed off, and you can expect them to be less sensitive, but you can expect them to be a better proxy for just exactly how the fundamental landscape is panning out on this trade, right? So that little test of 60s, that was a point where I had to heavily lean on correlation to keep myself in that trade, and to not panic out because prices were moving against me. And so down here, I think this is where this was the mistake that I made on this trade, was getting out prematurely. That test of 60s, shook my confidence because I had such big size in this trade. You can see I'm exiting right on the break of this ledge here at 45s. But realistically, as I show you exactly how the trade unfolded, there was definitely scope here for me to stay in this trade below this level, to let the price action play out, to once again keep leaning on these correlations. And you can see on the volume as well, that there's very clear single prints down here of where the bund barely traded, and so that was a good place to stay in for a flush. And so I'm not totally out of my position yet here. I still have I've taken some off at the lows here, but I'll definitely
there's that flush. I see a couple of questions. I think so. Luke is just. When did you go live, Luke? You went live in.
I've been live just 2 months now.
Yeah, 2 months, and you had what, 3 or 5 contracts on this trade?
5 on this trade.
5. Yeah. So Luke, just answering what size on the FGBL. So
sure.
getting into and accessing those trades and using the correlations to enter, mentioning about the low volume node just sitting there below the 38s. But with the Journalytix platform and Luke and tagging, is for each one of you is understanding the areas that you do well. Now, I know Luke does very, one of his core edges when there's clean and strong binding correlations in place. And when there's those plays, he knows how to leverage of the other parts of the ladder. Now, when there aren't any correlations, his skill set yet at this stage is not at the level for him to be consistently profitable when there aren't the correlations. And so how he's taking on those trades. And so the main purpose of having Alex today, Luke explaining his trading strategy, is the ability to identify where you operate in your current skill set at the best, and then the areas that you don't, how are you safeguarding yourself in those areas so you can put on, for him, his max clip on Bunds at this stage is 5 contracts. Do you have any more contracts than that?
I have 6 contracts.
Yeah, you have 6. So he was literally at his max clip, and he was holding this trade with conviction. You can see now it's trading down to 25s and 24s, and his first entry was the anti-data. So now for Luke, it's how he strips this down, how he dissects, how he diagnoses this trade. So the next time he's faced with it, he can scale it even bigger. So whatever trade, if you're a micro intraday trader and scalper, how are you going about to amplify the trades that you do well in, and how do you develop that data? Luke, is there anything else left from your side?
Nope. I think that's all I got.
Yeah, no, fantastic. And if there's any questions for Luke, I can keep him here for a minute or two. I know he loves going straight back to his screen. I have. Why no recent trade, a bid and ask column? So what Luke was showing over here was a replay on, so he has the ability to use the Jigsaw replay to trade. His actual trading platform that he executes is on another trading platform, but all his drills and all his practices is on the Jigsaw. So that's why you can't see that last traded quantity. How was your target set? How did you decide to get put where you did? So what made you decide to exit, and what was your target?
So if you can see the chart of the Bund on the bottom right there, for me there was a clear axis and there was a clear target as well, because if you can see gold, right, the target of this trade was essentially the lows of the move that it created overnight, and the structure was there. The axis was there. I think my one of the pitfalls on this trade was I could have been more patient to wait for a flush through those 130, 133s. But yeah, essentially once we were getting down near 130, 140s, that was a good target for me to be getting out. And just some subtleties about how the correlations were playing out on the ladder. I felt especially gold breaking correlations made me a little nervous. So I was maybe too eager to be getting out of this trade. But yeah, I think there was absolutely a clear target here, just based on the structure we made overnight and about what other markets were doing.
So essentially targeting the start of the move. He does use, a lot of the traders use when they're into the trades, their EMA trades, especially if there's a trend. You can see a couple of the EMAs, but sometimes it's also safeguarding against low volume nodes. So most of our traders do exit, both on a charting, but in a confluence with seeing the right order flow and the correct action. Okay,
great.
So thank you so much, Luke, and thank you again. Luke's been trading for 2 months. So for Luke, it's all about now him surviving over the next few months to the year, so he can accumulate the data, so he knows the areas that he's working upon. Which areas do you feel you're not performing in, Luke? Just to end the question, what areas have you noticed since you've been live the last 2 months where you're losing money?
I'm losing money in technical trading, but maybe that's a byproduct of me not leaning into my edge. I think that's really important. Trading is finding your style, finding your edge, and leading into it as much as you can. I think a long-term goal of mine is to really, really improve my technical trading, because, I think intrinsically I see a lot of good technical trades, but my skill set is not there to take advantage of it. But fundamental trading like this, I think, is definitely my strength.
Okay, fantastic. Well, thank you very much, Luke.
Thank you.
And yes, I will see you after this call.
Yes.
The time has gone. We've just gone over our session. Just to communicate, what I'll do is I'll take a little walk around the floor. I'll have to do it through my phone, so hopefully I don't lose any network. The people that if you want me to do a little tour, just say yes. I know I asked this earlier on, but I know we've gone on for an hour and a half. Just to mention, on the 16th of May, axiafutures.com/believe, there'll be a workshop with myself and our head of training, Richard. Okay, so axiafutures.com/believe, click on there, register, you'll get the emails for that workshop. So you just need to register there, and we'll see you on the 16th of May. Now, what I'll do is I will switch over to my phone, and these trades, we share a lot of trades both on our YouTube channel. Richard, we host a lot of workshops. We focus a lot on just order flow tactics, but we thought for today's workshop, correlating the Journalytix tagging, but also displaying other modes of trading beyond just the intraday scalping, how you can use correlated markets in your core market. And I just want to communicate, when you're developing your trading skill set and you're learning for the first time, there's the peripheral vision that you can train. And I work with some sport vision trainers who increase coordination skills, and what happens with a trader when you've got one ladder, it's very hard, and it's called a saccata, your eyes' ability to observe change and track change, is when you have that one ladder, over time your peripheral vision grows, and your ability to see correlations can absolutely influence your ability to see opportunity in your main market if there's a theme that's hit the market. Now, when there's no correlation between the asset classes and they're on they're mutually exclusive and independent, then you're just trading those, the individual identity of the flow of the ladder. But when there is cross market flows, and so what Luke will do over here is he would tag this trade as so you'd create a tag cross-market correlated flows. You could probably find something, and then over time you want to collect the data on this specific trading edge and strategy. Okay, so I hope that that explains of how so when I have my discussions with him, and when I have my coaching sessions, then I'll say, okay, how are you doing in this area? So we'll break down your correlation trades. You're doing really well over here. You're absolutely stinking everywhere else. How do we improve those skill sets? Okay, so what I'm going to do now is I'm going to get onto my phone, and hopefully you can see me. Yes. So let's try this.
Recording in progress.
Let's mute that. Okay, can you see me? There, yes. Okay, so we're going to go on a bit of a tour, and I'm going to go to the floor. A lot of the guys have left home, I think. So what we've done here in Cyprus, we started this floor in April last year. We're also going to be the very first kind of green floor. We're putting our solar panels on. We have a generator outside. And so I'm going to take you on a tour. We've been in place since April of last year. I might go through who sits where. We've got our first main floor. We've just developed our second trading floor. We've just got a couple of traders on that floor. And the reason for Cyprus, a few reasons. We are creating this training floors, and what we're working on is creating a high performance retreat center where a lot of our traders from other parts of Europe can come here. Certain times of the year we will work on certain performance aspects of the game. And so let me take you on this tour, and there's also the tax benefits in Cyprus aren't too bad, but we have to make money in order to take benefit of the tax. So that's an important caveat. So let me take you, let me see if I can switch this around. Let's switch that around. Okay, so excuse the mess because we're still building out here. So I'm going to come to the second floor in a moment, going through the dark passage over here. So this over here is our first trading floor. This is actually Luke's desk right over here. We have our senior trader who heads up the team. He is located and sits over here. And then we have approximately, I think, 9 desks in here. Hope I'm not disturbing any other traders. Yeah, they've all gone home or either in the outdoor gym. So we have 1, 2, 3, 4, 5, 6, 7, 11 desks. Maybe it's 11 desks or 9 desks. 3, 6. It's 9 desks in here. And this is Alex Morris, who did the tagging. This is his desk right over here. So this is Alex desk. So Luke and Alex sit opposite to each other. So they bounce a lot. The collective mind, the working together on plays, dissecting the plays is what happens over here on the floor. Okay. So then what we also have, and I'll try and put this out, dividing the 2 floors. I have to find the light. So let's just see that over here. What we have over here is actually our outdoor classroom. So this is where the team gets together on the weekend. So this over here is where, well, we have our barbecues here. It's our outdoor area, and actually divides, this courtyard divides between the two floors. So there's a floor on that side. The floor that I just showed you with Luke is over on that side. We're still building our outdoor barbecue area. If a trader's been stopped out, we don't normally drown them in that in the swimming pool over there. And so let's go to the other trading floor. Let's have a quick look, and then I'll take you to our outdoor gym that we're building at the moment. It's still under construction, so we'll look in the next floor over here. Peter over here. So Peter, you might have seen him on the YouTube channel. So he's on the second floor, and we could have a couple of traders over here. This is where we can house 12 traders. So we've literally just opened up this floor. We've got a few traders that'll be joining us over the next year. And when I join the team, when I trade from over here with the guys, occasionally when I'm not in my office. Okay, so let's do one more. I'm going to walk through. Where am I going to walk through? Let's walk through the back. I don't know if I have the keys, so we're having to redevelop the kitchen area, but I'm going to go through the back now, and let's see if I can. So you probably can't see that outdoor area over there, but that's going to be actually build an outdoor sauna, cold plunge, and a bit of a yoga deck, and then I'm going to go to the gym over here. So we'll just put the lights on in a moment. So I think the light is over. Yeah. So this is the gym. We're just getting all the equipment coming in slowly over the next month. So for the guys, just during the day, they can break, for a bit, do a physiology flush. There's an outdoor area over here where we're getting a big outdoor rig that arrives actually tomorrow. So if you're ever in Cyprus, just hit us up. We have barbecues. Part of the Jigsaw, both the Axia Jigsaw community, everyone, if you're ever in the area, always just drop us an email and come meet the team. We have a barbecue at least once a month with the entire team on that big African sapella. So trying to create a very holistic performance environment for our traders. So hope and that's our big generator. The electricity in the area does go down sometimes, so we need to make sure we backed up. We've got 4 internet lines, 2 Starlink satellites, just in case the fiber optics go down. So just making sure everything is managed from an infrastructure perspective. So that's a quick little tour. So we've got a couple of senior traders here, mixed with a couple of junior traders, brand new team that we started just for the past year. So we're slowly building the team and the traders. Okay, so I'll go back to my computer and I'll finish off with, let me just switch off there. So thank you for joining us today, and hopefully we'll be doing more of these, throughout the year for the Jigsaw community. We've been working closely with Peter over many years, and always striving to develop world-class traders. So any of you, hope you've enjoyed today's session, and I look forward to any of you who come into any of our offices located in London, Cyprus, or Poland. We are opening up an office in around September in Thessaloniki, Greece, and there's one potentially in the Bahamas for our American traders out there. That will be around near the end of the year on the island of Freeport. So look forward to, if any of you around the world, looking forward to meeting you. And next week, in 2 weeks' time, 16th of May, axiafutures.com, sign up for that workshop. You'll get the emails for when that workshop and the time, and I'll be seeing you there. And thank you for joining today, and all the best and happy trading.